Today in crypto, the price of Bitcoin has slid back under the $10,000 mark. Have the bears taken charge of the market, or is this just a temporary bump on the road to higher prices? The post-halving cost to mine one Bitcoin indicates that the price will be much higher by the end of the year, so hold on to your Satoshis, everyone. Samsung makes a huge Bitcoin announcement. Big power ledger news coming out of Italy, and the United States has set a very scary precedent that could have very far-reaching implications for privacy technology in the cryptocurrency industry. So make sure you watch to the end of this video to hear all about that crazy arrest that just happened in the United States. The cryptolark. This is where you subscribe for all of the latest and the hottest happening in crypto. So let's turn to the charts first, and I want to take a look at the 50 and 200 day moving average. Now, we've been watching these moving averages for quite a while now. We're likely just a few days away from a golden cross at this point, unless, of course, there's some crazy significant market breakdown. But hitting that cross will be a very strong signal of the continuing positive momentum that we are seeing in the market. Not to say that's going to mean like an instant moonshot when we do hit that golden cross. It's just a really good sign on the strength of the market. Although the price action over the weekend has definitely started to worry some people who are, I think, a little just too caught up in the moment-to-moment moves of Bitcoin. Remember, long game. That's where the money's made. I would also like to point out that the price is still well above both key moving averages. So we're above the 50-day, we're above the 200-day moving average. Although a retest of those zones on a shorter time frame is certainly not out of the question. Now, a test and a bounce off of the 200-day moving average around the $8,800 mark, that would not invalidate the bullish momentum that we are seeing now in the markets. That would actually be a good move if we saw it happen. Not that we have to do that to see positive momentum continue, but it would be good if we bounced off the 200-day. We can also have a look over here at the Bollinger Bands. We can see that the middle line here on the Bollinger Bands just acted as a great bounce for support. So we did see the price bounce back when it hit that line. Now, a farther breakdown on the price of Bitcoin could see us testing the lower end of the bottom band on the Bollinger Bands, which would actually put us around the 8,800 zone, which again is just above that 200-day moving average. So that's where I'm keeping my eye at right now. If we go below those levels, then we can reconsider our options. But if we maintain above those moving averages, I think the market is still in a very strong position. And just in case you needed some perspective, we are still up over 35% for the price of Bitcoin just in this year alone. And we're also at the same price that we were back in the long, long ago time of last week. So stack, sats, and chill, my friends. This Bitcoin rally has not even truly begun to take off. Just as a reminder of where we're likely to be going, take a look at the stock to flow chart for Bitcoin. End of year price is highly likely to be back over the $20,000 mark. Those people who are accumulating Bitcoin right now will be rewarded big time in the coming years. By the way, altcoin trading, it has been going crazy recently. And if you are trading altcoins, then make sure to maximize your success with an advanced trading tool like 3 Commas. You can use the link down below to get a 10% discount on a 3 Commas subscription and also a free 3-day trial. I'll also leave a link to a tutorial that I did if you want more information about how to use 3 Commas to maximize your trading success. Okay, so I have an interesting bit of Bitcoin mining news here for you. This actually has a lot to do with the price of Bitcoin. According to TradeBlock, the cost to mine a single Bitcoin after the halving might need to be around $15,000 per Bitcoin, assuming, of course, that we see the hash rate continue to rise at the rate that it has been rising. Now, if hash rate were to just kind of stay flat, then that break-even price would actually be around $12,500. Either number much higher than we're at the moment. And of course, that's just the average. Yeah, there's going to be some miners that are going to have sweetheart deals and thus lower electricity fees. But let's just assume that the network trend does continue and that most machines will be able to keep running post-halving because a lot of miners have probably already upgraded their machines to the new generation of machines, which will mostly all be profitable post-halving. So you probably won't see a massive hash rate drop after the halving. I mean, for reference, in the 2016 halving, there was only really just a slight drop post-halving in the overall hash rate. It wasn't anything significant, and it didn't last for a very long time. Will we see that play out again like that? Hard to say, but I would suspect it won't be very different. So if miners need Bitcoin to be $15,000 a piece, then that essentially becomes the new floor for the price of Bitcoin. Now, that's not to say that it's instantly going to shoot up to $15,000, but it certainly won't stay under $15,000 for long if that is the new price floor. Bitcoin has done very well to follow along with the price of production during its long history. So Bitcoin in this scenario should be over $20,000 by the end of the year based just on the mining metrics. Then we add in the scarcity effect that the block reward halving will actually have long term on the daily emission of Bitcoin and the selling pressure from miners, and it becomes apparent, of course, that the price is going to be going up. That's where it's going. The next story is from Samsung. It is now confirmed that the new S20 will have Bitcoin and Ethereum wallet support. The last generation of phones also had this key store support. So really what this story is, it's just awesome to be seeing that Samsung is continuing to do this, that they are enshrining crypto wallets into their phones, which is just so huge. I mean, it's crazy that there are people out there who still doubt the seriousness of crypto and say Bitcoin's a big scam. This is Samsung. Samsung, man. This is a company who sold hundreds of millions of phones last year. I mean, 78 million just in the third quarter of 2019. And it is the global market leader for the phone market with around 23% of the total market. This is huge news coming from Samsung. And it is great to see such a massive company continuing to support cryptocurrency. Okay, up next, our old mates over at Power Ledger have won a very big contract with an Italian energy utility. Probably part of the reason behind the 200% price spike that we saw for Power Ledger the other day, but essentially what it is Power Ledger beat out 230 other applicants from 37 different countries to be used by a company called Alperia for their 280,000 residential and commercial customers for energy trading, origin tracking, measurement, and verification, as well as the reporting of renewable energy certificates. Power Ledger is one of those companies that has just moved from strength to strength and has really just come out of the bear market just punching, and it's just got this list of partners and pilots and projects that would honestly make many a crypto company very envious. So this is just another great feather in the cap for Power Ledger in their continuation of renovating and revolutionizing the energy markets. And the final story for today is a very worrying story coming out of the United States. The U.S. Department of Justice calls Bitcoin mixing a crime in their arrest of a software developer. Now, the developer, whose name is Larry Harmon, was arrested earlier this week for allegedly participating in a money laundering conspiracy worth more than $300 million, particularly in relation to a dark net marketplace called Alphabay. You see, the trouble is that Harmon created something which was called Helix. Now, Helix was a Bitcoin mixer. And in case you are not familiar, a Bitcoin mixer basically sends out transactions in mixed batches so that individual payments become much harder to trace. So this service basically added a certain layer of privacy to Bitcoin transactions, and for providing that service, Helix took a small little fee. Now, according to the Department of Justice, this equates to running a money laundering business. Harmon, if convicted, faces 30 years in prison. That's loco, man. This guy is being made an example of just in the same way they did to Ross Ulbricht, hashtag free Ross, by the way. This guy should have just decided to be a banker, man. He could have helped launder money for drug cartels all day long, and instead of getting arrested, he would have got a bonus. Now, the Justice Department Assistant Attorney General has come out and said that this indictment underscores that seeking to obscure virtual currency transactions in this way is a crime. It is a crime. So the Department of Justice has just taken a very strong stance against mixer technology. It is now a crime to mix Bitcoin transactions, according to the U.S. Department of Justice. And look, was some of the Bitcoin going through Helix being used to launder money? Yeah, I'm sure that it was. Was Bitcoin going through Helix used to pay for drugs and stolen credit cards and fake passports and a whole host of other crazy, nefarious BS? Sure. Why? Of course it was. Of course it was. Let's be real here. But that was not the only use case for this technology. Just because some people use technology for something bad doesn't mean that that technology is bad and that the software developers should be prosecuted. People wanting to just preserve their privacy, they could also use this. Just because Alphabet promoted the use of the Helix mixer does not mean that the creator wanted for people to be laundering money and selling drugs using this mixer. So anyway, that's the breakdown of the story. So the big question we have to ask now is, what does this actually mean for the crypto industry overall? Well, potentially a lot, and potentially a lot of bad stuff. And we've already seen a raft of really anti-privacy legislation being put forward, targeted at the industry. The FATF travel rule is probably the biggest one to seek to de-anonymize addresses, but FinCEN is also on the verge of releasing some big and significant crypto regulations. We've seen Monero be delisted from a whole host of different exchanges, and in general, privacy rights globally have been under assault as the big brother spy state continues to grow in power. Orwell really couldn't have written it much better. Technology is the only tool that we have left to fight back with, in so many cases anyway, which is exactly why prosecutors continue to attack privacy-enabling technology. Now, if this prosecution goes through, then expect more charges to be laid against crypto companies and developers. For example, the privacy-centric Bitcoin wallet Wasabi actually has a built-in mixer, so that makes it a very likely target for prosecution, as is the exact same service that Helix was offering. But it's not just Bitcoin products that could be in trouble here. Dash, it has a private send option that is basically just a built-in Dash mixer. That's a potential, right? And we're only talking about mixer technology here. What if the DOJ expands it beyond mixer tech? What about ZK Snark privacy technology, which is incredibly robust privacy technology? Then we got to think Ethereum's Aztec, which has just been deployed, which is way more powerful than a mixer service in preserving privacy. That could be under target as well. What about Ernst & Young's Nightfall? I mean, the implications for all this could be very far-reaching. Or this might just be the end of it. Maybe they'll say, hey, you know what? We're just going to ruin that one guy's life, make an example of him, and hope that other people don't do things like this in the future. But somehow, I think that this is not going to be the last that we hear about the U.S. government going after privacy technology and prosecuting software developers. I mean, I really hope the federal judges actually rule in the favor of privacy here and of common sense, of course. But what do you think? Is this the start of something bigger? Is all crypto privacy tech going to be under threat as a result of the precedent that's currently being set? Or do you think that the judges will actually rule in the favor of privacy? I would love to know your thoughts on that down below in the comment section. And that's all for today, everyone. Thank you so much for watching the video. Seriously, I hope you had an awesome weekend. I really appreciate your time coming to watch the video and listen to this dude talk about cryptocurrencies on the internet. And if you did enjoy today's video, hit that thumbs up button. And make sure to subscribe to the channel if you are new around here. Long live the blockchain. And peace out till next time.